The EU just declared war on crypto innovation. They want total control over every exchange in Europe. Hi, I'm Dan from BeAWhale, and here's everything that happened last week. Let's start with the disaster. 2 massive hacks just hit DeFi in the same week. Balancer, $116 million stolen from staked Ether. Stream Finance, $93 million lost and platform completely shut down. That's over $200 million gone in a matter of days. Here's the crazy part about Balancer. This protocol has been checked by security experts 11 times since 2021. 11 security audits, and someone still found a way to steal over $100 million.
Now, the thing that got exploited, the contract, was Balancer V2. It's actually not the newest version of the contract. It's quite an old contract.
It's an OG.
Very OG contract, but it's been very highly vetted, forked a cajillion times. One of these things that people did not assume that there were going to be any issues with it because of how many eyeballs have been on this contract. It's part of the reason why it has rattled so many people.
Balancer's now offering $23 million to get the funds back. Otherwise, the hacker faces consequences, whatever that means when they're anonymous. But Stream Finance is even worse. They shut everything down. Their stablecoin crashed to 50 cents. Think about that. If you had $100,000 worth, it's now worth $50,000 instantly. This shows that even trusted, audited protocols can get completely destroyed. DeFi's growing up fast, and these mistakes are expensive. Moving to Wall Street, and the news here is bad. US Bitcoin ETFs just lost over $2 billion in what's being called the second worst week in their history. Let me explain what this means. Big institutions, pension funds, hedge funds, the smart money, they're pulling out of Bitcoin. These are the same people who were buying Bitcoin like crazy for months, and now they're selling. Here's the interesting part. Solana ETFs are actually doing great. They've been gaining money for 7 days straight. So institutions aren't leaving crypto completely. They're just leaving Bitcoin and Ethereum. The big question is, are they selling because they think the market's going down, or is their selling actually making the market go down? Either way, $2 billion left in a week. That's a big deal. Here's a story that's changing an entire industry. Cypher Mining just made a $5.5 billion deal with Amazon. IREN made a $9.7 billion deal with Microsoft. That's $15.2 billion total. But here's what's really happening. Bitcoin miners are giving up on mining and switching to AI instead.
Even though AI operations demand up to 20 times the capital expenditure compared to Bitcoin mining, they're currently more capital efficient and profitable.
Think about it. These companies built huge data centers to mine Bitcoin, but mining isn't making enough money anymore. So they realized something. We can make way more money renting these data centers to Amazon and Microsoft for AI. Cypher Mining's stock jumped 34% after the news, and this isn't just one company. The whole industry is doing this. The irony is perfect. Bitcoin mining was supposed to be revolutionary. Now miners are just becoming landlords for big tech's AI. The European Union just announced they want one giant regulator controlling all of crypto across Europe. And this destroys everything crypto was built for. Let me explain. Crypto was invented to escape central control. The whole point of Bitcoin, Ethereum, DeFi, all of it was creating money that nobody controls. No banks deciding who gets accounts, no governments freezing your funds, no permission needed. Freedom. And now the EU wants to do the exact opposite. Here's their plan. They already made rules called MiCA, but apparently that wasn't enough control for them. Now they want one agency. ESMA, to have direct power over every crypto exchange and every crypto company in 27 countries.
The Capital Markets Union is an initiative to create a truly single market for capital across the European Union. The aim is to get money, investments and savings flowing across the Union.
Right now, you can get approved in one EU country and operate everywhere. Different countries compete. Companies have choices. But under this plan, one massive bureaucracy in Brussels controls everything. Think about what that means. Slower approvals, more restrictions, one committee deciding what's allowed and what's not. Some people say, well, one regulator is simpler than dealing with 27. But crypto wasn't built to make regulators' jobs easier. It was built to work without asking them for permission. The EU claims this will help startups and improve markets. In reality, it takes decentralization technology and puts it under centralized control. Decentralized money? Controlled by a central authority. That's not crypto. That's just the old banking system wearing a blockchain costume. Let's talk about something actually good. Ripple just raised $500 million and is now worth $40 billion. And here's the big deal. Citadel Securities and Fortress invested. Citadel Securities is one of the biggest trading firms on Wall Street, and they're putting money into crypto. This isn't some random crypto investor, this is serious Wall Street money saying, we believe in this. Ripple's been winning lately. They beat the SEC in court. Now they're raising money at a massive value. Plus, they launched RLUSD, their own stablecoin, which became a top 10 stablecoin in less than a year. So in short, traditional finance is backing a company that's competing against traditional finance. Speaking of Wall Street, JPMorgan just said Bitcoin looks cheap compared to gold and should be worth $170,000. Let me say that again. JPMorgan, one of the biggest, most conservative banks, is saying Bitcoin should go way higher. For years, crypto people said Bitcoin is digital gold. Wall Street laughed at this. But now JPMorgan is making the same comparison and saying Bitcoin is too cheap. Bitcoin's around $106,000 right now, so they're saying it should go up about 60%. Banks get predictions wrong at times, but when JPMorgan starts comparing Bitcoin to gold and setting huge price targets, that means institutional money is finally understanding what Bitcoin really is. This sounds boring, but it's actually really important. FTSE Russell, the company that tracks stock market indexes, just partnered with Chainlink to put their data on blockchain. Why does it matter? Right now, if you want official market data, you have to pay expensive companies for it. But putting it on blockchain, now anyone can access it for free. This is the kind of background stuff that lets developers build better crypto apps. You can't build good financial products without good data, and now that data is coming from one of the most trusted names in traditional finance. This isn't crypto begging to join finance anymore. This is finance choosing to use blockchain. Banks are asking the US Treasury to ban stablecoins from paying interest. Coinbase is fighting back hard. This battle will decide if stablecoins can compete with banks. Ethereum just hit 24,000 transactions per second thanks to new technology. Ethereum is scaling is actually true now. MasterCard might buy Zero Hash, got approved in Europe, and there are rumors MasterCard wants to buy them for $2 billion. Coinbase might buy a stablecoin company for $2 billion. Why? Because stablecoins are now 20% of their money. Here's the bottom line. DeFi lost over $200 million to hackers. Bitcoin's ETFs lost $2 billion, and the EU wants total control over crypto. The problems are real, the regulation is coming, but big money keeps coming in. This is crypto growing up, messy, crazy, but unstoppable. If you like this recap, smash like, subscribe, and I'll see you next week.